Every year as we file our taxes, we are left wondering, where does all this money actually go? We have been told that taxes fund essentially public services, but why do our roads still have potholes, our schools lack resources, and our healthcare system falls short? Have you ever felt like you are paying too much tax and getting nothing in return? So today we are diving deep into a controversial topic: why tax is the biggest scam in India. Imagine this. You are working hard, making a living, and just when you think you can save up, a big chunk of your income is taken away in the form of taxes. And what do you get in return? Substandard services and rampant corruption. It is frustrating, right? So stick around, because in this video we are not just going to talk about the problems, we are going to uncover the hidden truths behind our tax system and explore why it feels like a never-ending drain on your hard-earned money. You will learn about the intricate ways taxes are mismanaged, the surprising facts that the government doesn't want you to know, and most importantly, how this impacts you directly. By the end of this video, you will see why the tax system in India might just be the biggest scam you have ever encountered. Get ready for some shocking revelations that might just blow your mind. Part 1. The tax burden. First, let's talk about the sheer amount of taxes we pay. The Indian tax system is incredibly complex, with multiple layers of taxation affecting everything from your salary to the products you buy. Income tax. For most of us, the most direct tax we encounter is the income tax. Depending on your income bracket, you could be paying anywhere from 5% to 30% of your income to the government, and that is just the basic rate. Add in surcharges and cess, and your tax liability can climb even higher. Surprising fact here is that only about 1.5% of India's population pays income tax. Despite this small taxpayer base, the government collects substantially revenue, but the tax burden on those who do pay is significant. Goods and services tax. Next up is the goods and services tax, or GST. It introduced in 2017. GST was hailed as a revolutionary step to simplify India's convoluted indirect tax structure. It replaced multiple cascading taxes levied by the central and state governments with a single tax applicable nationwide. While this sounds great in theory, the reality is more complicated. GST rates in India are among the highest in the world. They range from 5% on essential items to a whopping 28% on luxury goods and services. Even daily necessities often fall into the 12% or 18% brackets, which adds a significant amount to your overall expenses. Property tax. Homeowners are also familiar with property taxes. These are levied by local municipalities and can vary widely depending on the location and the value of the property. Property taxes are supposed to fund local infrastructure, but often homeowners see little return on their investment. Other taxes. Then there are other taxes that sneak up on you, like excise duty. It applied on goods manufactured in India. This tax affects everything from alcohol to tobacco. Customs duty, levied on goods imported into India, making foreign products significantly more expensive. Professional tax, imposed by state governments on professions, trades and employments, further nibbling away at your income. Did you know that in addition to the above taxes, there are also smaller, less talked about taxes like the Swachh Bharat cess, Krishi Kalyan cess, and various state-specific levies? Each of these taxes may seem small individually, but they add up, increasing the overall tax burden on the average citizen. The total impact. When you add up all these taxes, the average Indian is paying a substantial portion of their income to the government. Let's break it down. Direct taxes. These include income tax and wealth tax. Though the wealth tax was abolished in 2016, its place was taken by a surcharge on super rich individuals. Second, indirect taxes. These include GST, excise duty, customs duty, and VAT, which still exist on certain items like petrol and alcohol. So basically, according to a study, Indians end up paying over 50% of their income in various direct and indirect taxes combined. This is a staggering amount, especially considering the return in terms of public services. Where does it all go? With so much money flowing into government coffers, one would expect excellent public services in return. Unfortunately, this is often not the case. Corruption, inefficiencies, inefficiency and bureaucratic red tape result in a significant portion of tax revenue being wasted or misused. Essential services like healthcare, education, and infrastructure remain underfunded, leaving taxpayers frustrated and disillusioned. Here are some terms which you need to know. Tax to GDP ratio. This is a measure of a nation's tax revenue relative to its gross domestic product. India's tax to GDP ratio is around 17%, which is low compared to other developing countries, indicating that the government is not effectively utilizing its tax base. The tax burden on Indian citizens is heavy and multifaceted. While taxes are essential for the functioning of any government, the inefficient use and mismanagement of tax revenues in India make it feel like a scam to many. As taxpayers, understanding where our money goes and demanding accountability is crucial. Stick around because we are just getting started on uncovering the layers of this complex issue.